You are watching Market Watch, the brief overview of the key events from the world of finance. The U.S. Senate has approved a controversial bill on sweeping tax cuts and budget redistribution, championed by Donald Trump. The bill extends the 2017 tax reductions, introduces new deductions for tips and overtime income, and increases funding for the military and immigration enforcement. At the same time, it imposes sharp cuts to aid programs. Despite opposition from some Republicans and Democrats, the measure narrowly passed with a 51-50 vote, thanks to the vice president's tie-breaking support. Critics warn the plan will add $3.3 trillion to the national debt, threatening the country's fiscal stability. Financial market volatility has surged amid the bill's advancement and mounting U.S. debt concerns. Yields on 10-year treasuries remain under pressure, while investors grow increasingly uneasy about the country's budget trajectory. With the debt ceiling raised and new spending on the horizon, capital is fleeing the dollar, which is experiencing its worst first half since the 1970s. The dollar index has dropped to its lowest level since March 2022. In contrast, gold is on the rise, gaining 27% year-to-date. Fiscal uncertainty and global trade instability are eroding confidence in U.S. assets and prompting a shift to safe havens. As the July 9th deadline for new trade agreements approaches, global markets are on edge. President Trump ruled out any extension and voiced doubts about a deal with Japan, though he remains hopeful about reaching an agreement with India. These statements have spooked investors. Asian equity markets declined, particularly in tech. Analysts note that rushed trade negotiations fuel skepticism and may trigger another round of tariff escalation. This adds to global growth risks and increases pressure on the Federal Reserve, which has so far resisted immediate rate cuts despite political pressure. The crypto market is showing signs of tightening liquidity. Bitcoin reserves on exchanges have dropped below 15%, their lowest level since 2018. Institutional demand is growing, as seen in the record $4.7 billion in spot ETF inflows over just 15 days. OTC reserves are also shrinking, confirming a trend toward long-term accumulation. Analysts are revising year-end price targets upward to $140,000 to $200,000, citing a continued supply shortage dynamic that supports bullish momentum. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.